Hey folks, and welcome to the Pipnotic Symposium on the 17th of May 2024. Okay, so today I'm going to talk about asset strength reversion. There are a lot of questions about its configuration, and I think some people are seeing some people's trades and wondering why they're not getting the same trades. Others are maybe wondering why the configuration looks a certain way. So I just want to spend a couple of moments today on talking about that before I get to meet with Andrew, who's holidaying here in Bali with his family. So in a few hours I get to go and hang out with Andrew for a little while, so that'll be amazing, absolutely amazing. I met with Todd. He was visiting here as well recently, which was really awesome. So if any of you guys ever come to Bali, please let me know. I'd love to meet up for a coffee and a cake. There's a remarkable bakery here on the island called Roosters, owned by a dear friend of mine who's Danish, or he's half Danish, half Greek. And you go into the kitchen and it's just filled with Danish people. It's quite funny. It's almost like a small community of Danes. So when I feel a little bit homesick, then I can just wander into the kitchen and embrace a conversation in Danish. It's pretty awesome. Okay, so before we get started, I just want to talk about how you install this software. We'll do that really quickly because I've covered that numerous times already. But what you want to do is you want to go to your MT4 terminal. You want to click on, obviously the file is already downloaded, okay? So then you copy the file, so you have it on your clipboard. So right click and say click. A clip or copy, so it's on ready to be pasted. And then you go to File in your terminal and you go to My Data folder. And here, oh, that was a bit of a big one. Here, what you do is you have to go into MQL4, and then experts go in the experts directory, indicators go in the indicators directory. Okay. Asset strength reversion and buy and sell zones, they are both expert advisors, and so they will go in here. Here we have asset strength reversion algo, and here we have, what do we have? Buy and sell zones. The buy and sell zones, they're just here. So those two are in here, right there. Okay. Supply and demand software, on the other hand, that is not. It is an indicator, so that goes in here. Okay. So just make sure that you put these in the correct directory. Otherwise, you will get results that are not very beneficial, and it won't work because you can't put an expert in indicators directory and expect it to work. It simply won't happen. So just make sure you get that right. Okay, and then once that is done, you can simply click on this little button here, which is a navigator, and then you can right click here anywhere really, or on any one of these, and you can say refresh, and that forces a terminal to rescan the directory that we just looked at and fill this tree menu with the directory. So each one of these here corresponds to the directories that we saw just a second ago. Okay, and so when you can see that it's in here, you can just go to it, and we'll grab this version here, asset strength reversion, and you take it and you drag it over onto the chart that you want it to be on. I already have it attached, so I'm just going to remove that. And I have my private key already, I have the product key already, and the configuration looks like that. And I'm just going to allow it to trade today. This is a demo account. And I'm going to press, before I do anything else, I want to make sure allow live trading is working, allow DLL imports is working, and then I press OK. And a quick comment regarding allow DLL imports. If you want to allow these globally, you can simply go to the menu, go to Tools, go to Options, go to Expert Advisors, and then here you click here, Allow DLL Imports. Okay, and you do that, and then this is the global setting, and so you don't have to do it each time you install the an Expert Advisor or an indicator that requires DLL exports. And this is very common. It says potentially dangerous, enable only for trusted applications. This is true, but most of the case, what is happening is that, at least for my software, I can't talk on behalf of anyone else's, but mine is using the Windows sockets DLLs, which are native to Windows, and I use this for network connectivity. Yeah, so you click that, you press OK, then everything should be running. And if your private key and the product key is correct and the configuration allows it, typically it'll focus on if it's allowed to trade or not. We want it to be able to trade. Then you'll see it spinning here in the bottom automatically with all the information that we have in the configuration. Okay, now it's just looking for trades. Okay, let me move this down here and go like this so we can see the histogram, because this is kind of important for this discussion today. Okay, so what we have here is rather when I use ASR, I like to see 3 time frames. I like to see the 1 hour. Let me close this. It's filling a little bit of the window space. Okay, so we have 1 hour, 4 hour, and daily. Okay, and the reason these are important to me is because I trade 1 hour as the minimum and the maximum is 4 hour. Okay, and so what happens when it's in this configuration and where's that sitting? Here it is. When ensure histogram alignment is enabled, when that's set to true, and I'm scanning or trading the 1 hour and the 4 hour, it will need price data on the 1 hour, the 4 hour, and the daily. And it sounds a little bit strange regarding the daily, and that's because when we are looking at signals on the 1 hour, we're looking for histogram alignment on the 1 hour and the 4 hour. The 4 hour is the confirmation time frame. Okay, and if we're scanning on the 4 hour, it's looking on the 4 hour and the daily is the confirmation time frame. The confirmation meaning we want to make sure that, we want to confirm rather, that the histogram is also ripe for picking both on the longer time frame but also the current time frame here. Okay, this is super important to be mindful of and remember. Okay, so just if you have it on, for example, this setting here, just 1, then you can have the 1 hour and the 4 hour. It only needs the 1 hour and the 4 hour because we're only trading the 1 hour. But if you're doing more, then you want to make sure that you have the time frames available so that you can see what's going on with the software. Okay, so we had a trade yesterday. So I want to talk very briefly about that trade within the context of this configuration, which is an alignment over multiple histograms. So this one will have to be set to true. Ensure histogram alignment. Okay, so that is just telling it that we want to see alignment in the histogram on the entry time frame and the confirmation time frame. Okay, or the entry time frame and the longer term time frame. And we had that yesterday, and we saw that here when the robot sold just up here. We had a beautiful trade. It got in here when we started to see the histogram turn negative again. And when we did, we said, okay, are we seeing the same thing, or rather, are we seeing the histogram in the sell zone on the time frame greater, which is the 4 hour? And then you can see, yes, we did. And then it clicked open the trade, and it got in, and it sold here, and we got out already somewhere down here. Okay, so this is a really important, and when it has this configuration where we are, in fact, focusing on these two, it just ensures that when you do qualify trades like that, that there's a very high likelihood that we're seeing something where we have like a really big inefficient run on this time frame, which is a bigger time frame, and also a really big inefficient run on this time frame, which is the entry time frame. Okay, we want to see an alignment between the two, because when you see that, we want to get in at the turning point on the lower time frame, and we want to trade in line with the bigger time frame, because this is where we get the big moves, and we're probably going to move down lower. All I just had to pause there as those kids in their noisy motorbikes racing through the rice fields disappeared. So when you see this happening when you're very tall on both time frames, this is the one that is going to ensure, or rather increase the likelihood of us hitting a wider profit. And currently in our beta group, we're looking at risk reward parameters, because we have an entry we got in here around yesterday. The stop is maybe somewhere up here, I don't know exactly, and the target is maybe somewhere around here. Okay, and so while we got the target quite easily, we want to see if it is possible to get much bigger targets that are in fact bigger than the stop loss. And by focusing on the bigger time frames, this helps facilitate that, because prices will move further on the bigger time frames than they will in the smaller time frames. And when you get a cycle completion like you can see here, well, there's a very high likelihood we're going to see something happen like that. And when we see this price move down like that before it continues up, so everything is cyclical, like so. Okay, so that's essentially why combining the two is so powerful. Yes, we will have fewer trades, but the trades that we do get into are going to be much high quality. And so I do recommend that this is a configuration that you go with. Okay, and there was a question I saw in the forum by a gentleman saying that their instance, I think it's a gentleman, I never know who's behind the alias in Discord, but they were saying that their instance of the robot wasn't doing anything, and while others were, I mean, mine sold here, I know a few other guys whose robot sold here, Anas is sold here, I think Forex sold here as well, but his did not. And so the question was, well, why did it not? And there are a few different reasons for this. Number one, if you're looking at the histogram here to see when the robot would have gone in, or then you have to make sure that the configuration of the histogram is the same as the configuration of the asset strength reversion algo. And I'll just show you quickly how to do that. So you just click on the algo here, and the things that you want to look for here are these settings. Histogram. You can see we have 100, 1.62, and we have 20, and we have 30. So you want to see something similar to that here. Let me compress that a bit, put it back, and we can have a look. And so we want to see something similar here. Here we're seeing the mean periods, which is, this is correct, except for this, 618. And then we have the fast, which is 20, and the slow, which is a 30. So now we'll let it update, and the green line will probably jump up a little bit. Yeah, it jumped up quite a bit. Okay, so maybe the configuration that you had was different. That could be, sorry, before I continue on, I just want to say, I mean, this is how you align asset strength histogram with the actual histogram. And you want to make sure that these guys are telling you the same thing, because you want to be able to see if the entries are correct. And while I'm guessing they're going to be correct. See, there was two different configurations there. While you want to ensure that they are correct, you want to make sure at the same time that they are in alignment if you're using the histogram to wonder why a trade was not opened or not. Okay, so this is how you do that. You align the configuration in the histogram and the asset strength reversion, and then you have a really good overview of that with this 3 time frame setup. Okay, so why are the reasons? What would the reason be that, I mean, my instance of the asset strength reversion algo is opening different trays than somebody else's? Well, this can be many different reasons. Number one is that I know a gentleman who shared some results this morning, which knocked my socks off, and someone asked, I mean, what's your configuration looking like? And they said, well, my configuration is like this. And so instead of having a 1.618, they only had it set to 1. And this, knowing what's going on in the code, this makes perfect sense to me, and I'll show you why in just a second. And this is because, I mean, it's not that much of a difference, as you can see here. Right, sorry about that. My wife just left. We have a half school day today, so she was just going to pick up our youngest and go out to lunch. Okay, so where was I? Okay, yes, so the configuration makes all of the difference, because as you could see on the other example just previously, where this was configured slightly different, where the modifier is 1.618, the green line, this pushes a green line really far up. And so while the histogram really has to travel far to move beyond this green line, I mean, it has to move really far to move beyond 1.618 level, which brings it really up there. Okay, and sometimes it might not even move above that, depending on your broker, depending on the price of this asset on your broker. I'm guessing generally they will be very, very close, but sometimes they will not be close because of some discrepancies in the pricing data. This is not too common in the ASR, because the data used to populate this and the engine of the ASR, it's normalized in a way that we can normally get rid of all the garbage, and we just see like a pretty consistent reading across these two pieces of software. And so normally it'll work more or less the same. In contrast to the supply and demand software, which is actually looking at specific candles. It's attaching boxes to specific candles. And so this can be one of the reasons that the supply and demand software is showing different zones from broker to broker. And this is also due to the market watch time. Okay, so here you can see that the server time is, what is that, quarter or 12 minutes to 7 in the morning. So this is, I think this is GMT plus 3. Okay, and so if I have a broker that is GMT, or GMT plus 12, then the candles are going to look potentially a little bit different when they are on non-round multiples of an hour or fractions of an hour. And when I say that, I mean if you have, let me try and draw it. If you have, let's say this is one 4-hour candle, and here there are going to be some other candles. That wasn't very well done. I can do better. Sorry about that. 2, 3, 4. Okay, and this will be the high, and then that'll be the low. If this is maybe GMT, so 0, and this is GMT plus 4. Okay, that's what it looks like here. But if you consider for a second GMT plus 3, which is just here, 0, 1, 2, 3, 4. 0, 1, 2, 3, 4. Yeah. So if we consider that GMT plus 3, I mean that would put it at here. We would actually grab the third candle, and it would put the box 2 forward. Okay, so then we'd maybe have another 2 candles that look something like this. Look like that. Okay, so if I try and number these candles, here we have 1, 2, 3, 4, 5, 6. Okay, so this is GMT, this is GMT 4, and this is GMT plus 3 right here. Okay, but this is a 4-hour candle from here to here in GMT plus 0. But for the GMT plus 3, when we have to move 3 candles over, 1, 2, 3, so it'll go from here to here. And so what happens inside this box can be quite different what happens inside this box. Okay, and so the candles can look different, hence different candlestick patterns or zones. And so this can, of course, like have a big influence in some of the price data that we're looking at. But when you're looking at multiples of 1 hour and derivatives of that, I mean, you have 1 hour. Okay, then you have half an hour. It's the same. It's the same. There's GMT plus 1, GMT plus 4, plus 9, GMT plus 0. It's going to be the same because the hour is non-divisible. It's not like a strange value which causes troubles for us. Okay, and so when you look at stuff on the hourly chart, 30-minute, 50-minute, you know, all of the other ones below 4 hour, you will not have any troubles at all. But when you look at everything above that, then things will look a little bit different. Okay, marginally on the monthly, but on the 4 hour they're going to be different. For the example we showed earlier, the daily, you know, of course the daily candle is going to start differently. Maybe the market opens at GMT plus 0, and it just starts printing really tall candles. You have 3 hours of bullish price action. Okay, the day before we come down. You know, we come down like this, for example. Okay, the first 3 hours it does this, but on GMT and the rest of the day or the session it does maybe something like this. But the GMT plus 3, 1, 2, 3, it's going to look here. So it's only going to look at this, and it's going to look like a pretty non-volatile day, isn't it? So yeah, you know, we were up and we started to break down a little bit. Okay, without really being mindful of the fact that actually earlier that day we were actually really volatile and moving from some significant lows. And so all of these things in here relative to the time frames, they really make a difference in relation to what the data actually looks like. Okay, good. And so now we're going to talk about the configuration just a little bit. The configuration, this is the version 1.086, which is stable. It works wonderfully. I would leave the default settings, just so when you open it, hit reset, put in your private key, the product key. If you've put in the product key already once this month, you won't have to do that, so it can stay empty, because it only has to happen one time for the month. And the only other setting you could consider playing with is maybe this one that we spoke about a second ago. You could lower this to 1 point. I've had it as low as 1.337. You can have it at 1.0, whatever you want. But this just tells the software how far higher and lower to push the sell zone line and the buy zone line. And if you have it on 1.0, that's a pretty mild configuration. I think you should probably you wouldn't have any issues with that. Sorry, the 1.0 is a decent level. 1.618, then you're finding like really extreme pushes in price. So you're going to get better entries. You're going to get later entries. Okay, so you're going to wait till prices moved above before we start to turn. But sometimes you might miss entries on the 1.618 mean modifier in relation to the smaller ones like 1.0, because it's just, I mean, things are just scrutinized to a higher degree. Okay, and then I would just let it spin. And how do you know if it's spinning? Well, you can see down here that it's spinning, and it'll just print this Pipnotic asset strength reversion, GPT. On this is a chart that it's running on, and this is the asset that it's currently scanning. Okay, and why is it printing it 2 times? Oh, sorry, well, 3 times per asset. Well, this is because when it's analyzing that, it's analyzing the histogram on the current time frame and the current time frame +1. Okay, so that's 2 of those, and it's also scanning the 4 hour. So it's scanning the 4 hour and the 4 hour +1, which is this one, which is why we get 4 of these. Okay, yes, and then it will just spin. Let's see, there's nothing going on. There's a small, I don't know what that is, we'll remove that. And so we have a small, so that's gone. So now it's just running. It's just spinning in the background, and you can put it on a VPS, okay, which is a recommended idea, because it has to be on. The MT4 terminal has to be on for it to run. If it's not running, then the software can't run. If you just take the lid of your computer and you close it on your laptop and expect that it's running, it's not. The software is sleeping just like the rest of your operating system. So you have to make sure that the laptop is running. And if you have like hibernation rules set, so if it's left and the mouse doesn't move for like 4 hours and then it switches off, then it'll run for 4 hours and then it'll switch off, and the software will only run for 4 hours. So you have to be mindful of all of these things, which is why VPS is a good idea, because they're running all the time. And they're cheap. You can get a VPS for maybe $15 a month or something if this is something that you want it to do. And then you just let it spin. You let it spin. One of the things that I found is that Fridays are normally a bit of a strange day. Markets can really rally on a Friday, or they can sell off pretty aggressively on a Friday, and this is because people are just kind of clearing their books for the weekend, and this can cause a bit of market volatility. It can cause liquidity to dry up a little bit as people are squaring up their positions before the weekend, and so new orders really move the markets a lot more than they would be at midweek. And so Fridays are kind of a strange day, so I don't like that. And I don't like that because prices have a tendency to continue to run on Fridays because of the thinner state of liquidity on a Friday. So just keep that in mind. Yeah, and I think that's about it. But the best thing to do, if you're using it and it's not working, hit the reset button, put your private key in. If you need to, put the product key in if you haven't done it at least once this month, and then hit OK. So one thing I wanted to cover, that is the maximum margin level. I had a question come in about, what exactly is margin level? Well, margin level refers to, let me get into a trade here. Just gonna get into a small one, so it's not going to cost me a lot of money. Let's see, this goes down, boom. Okay, so here you can see that we have margin level, and this is, what was it, 1,867,572. That means that there is an enormous amount of margin available in this account for this position size, for the leverage that I have on the account. So if I take my account and I reduce the leverage by 50%, then this value will go down by 50%. If I completely reduce that, well, then you'll see it go down by 50% once again. Okay, and so it can get quite small. And so, this is a relatively big account, but if you're trading like a $1,000 account or even a $500 account without leverage, you'll have a tough time taking trades that are bigger than a micro lot. Even 3 micro lots can cause this value, this margin level, to get very, very close to the hundreds, and you don't want this, because typically what will happen if a broker sees, let's say this is available margin, what happens is if you're down to 50%, which is the bottom here, which is the green line just here, okay, margin obviously depending on the amount of floating profit or loss in your account. Again, the margin, if we have a huge profit, this value here will go up. If we have a loss or we're negative, this value will go down. And so this is constantly floating, and it's actually normally really far away. Let's go like this. Normally it's really far away. Okay, so sometimes it's normally up here. But sometimes if you have a big minus position, it can begin to come down like so. If you have a big positive position, it can go the opposite direction. So what you want to do is you want to make sure that in order to protect your account, and the reason you want to protect your account is because if margin liquidity or available margin goes below 50% here, the broker will often do a margin call, and they will cut your position, and that will typically or potentially have disastrous consequences on your account. So you don't want that. You don't want to be anywhere near 50%. That's way too low. So I've set it to 5,000%. And the reason I've done that is because, obviously I have a little bit of money in this account. But also, I mean, I want to make sure that that my account is only trading positions that there is enough money in the account to maintain and to manage. Okay, but I also use that setting as a risk profile. So if we get below 5,000, then it's not opening any new positions. It's just waiting until things, let's say that this is 5,000 here. If things dip below, it's going to stop looking for orders. But if they go above, it'll say, okay, now we're okay again. There are dips below, okay, warning, okay, now we're good again. But this is not a warning because we're so much far above this. It's just, for me, for my own peace of mind, I like there to be a lot of liquidity in my account that can kind of just take the beating of the floating P&Ls that I experience in the positions, because sometimes the robot has 3 or 4 orders open at the same time, and I like to be able to stomach these. I want these all to be able to go to stop loss without getting even close to this one here. Okay, yeah, so that's what that value does. And a lot of people say, just reduce it to 50 or 100. And you can, but I wouldn't recommend you to do that, because if it goes, as I mentioned, below 50, they've just lowered it from 80 with my broker to 50. So now you only have to have 50% before a margin call. And I say, no chance. I want a lot of space, and so I put it at 4. I even lowered it from 5,000 to 4,000 here. But just leave it on this standard. I wouldn't change this unless you have a much smaller account. What I would do instead is I would increase leverage, and I would keep this at a relatively high number, because this is pretty important. But again, also be careful with leverage. It's a double-edged sword. Yeah, so that's a little bit on that setting. The stop multiplier is 4, which tells us that we're risking $4 for the opportunity. So we're risking 4 for the opportunity to take 1.3 out of that. So about a third, roughly a third of that. And we're working on that. It's looking like that we can probably begin to increase this to 2 or maybe 3, because when you combine the 2 time frames, things really seem to move. And hopefully we can one day go like this, but we're still testing. We need some more data, so we'll leave it at that. Okay, good. Well, I'm going to leave it at that for the time being. If you have any questions, please let me know, and thanks again for watching.